So like $1,000 account, you can control $100,000 worth of stuff for $1,000. That's pretty good. You just have to know it cuts both ways. If you're wrong.
All right, so let's talk about trading in particular, right? We're kind of doing that series right now inside of Wealth Stacks, and so let's talk about like if you were, and I think like that's kind of what makes trading a little bit different than even the business from a 12 to 18 months, because you could have some success relatively quicker than that inside of trading, right?
Yeah, you could, especially in a raging bull market like we are right now, right? I mean, we've been in a raging bull market for 10 years. It's very easy to make money when it's doing that. And you also have the popularity of Robinhood and Reddit and the GameStop stuff like that. The only problem that's going to happen is to a lot of retail traders is they're going to get ran over when it rolls over, right? Because right now they think it only goes up. So the first thing I would do is I would say don't use margin. So margin is basically leverage on a loan, okay? Let's say you have, a couple things. Like if you start out in the stock market, it's not bad, but if you don't have $25,000 or more to put in a stock trading account or an options account, they're going to flag you for this thing called a day trader pattern rule. All right. That's the terminology, which basically means you can only do 2 to 4 trades every 4 or 5 days, or they're going to say flag him as a day trader. Don't let him trade more than 3 or 4 or 5 times a week. Right.
Okay.
That could be a good thing. Like if you overtrade, that could save you. But if you're missing out on opportunities because you're stuck in that trade because you can't get out of it, that's another thing. So if you're going to start with stocks, you need more money. Now you can start with options, requires less money, but they're still going to flag you with that stuff potentially, right? I like trading stocks outright, and then I also love futures because futures, you can start out with $1,000 to $3,000, and they're already leveraged without you taking any margin out. So like $1,000 account, you can control $100,000 worth of stuff for $1,000. That's pretty good. You just have to know it cuts both ways. If you're wrong, it's going to wipe that account out fairly quickly. So you better be right. Yeah. So if you were to start with like $1,000 to $3,000, I would say futures, just because they're so leveraged, but you got to know what you're doing in order to do it.